Hey guys, what's up guys? It's Mario here and I'm bringing you back another video about the stock market, guys. Alright guys, we're going to be talking about the whole stock market. I'm not really going to be talking about, all fundamental stuff, and, all like political stuff, like news and, about the Federal like Reserve and all that stuff and, stuff what we got going on, with like Corona, like in China and, Russia, like in Ukraine and all that stuff and all the wars. But I'm basically, kind of like a technical analysis trader. I don't really trade off fundamentals. TA's technical analysis has always worked for me, and I'm just a patterns trader. And I mean, I usually trade off not fundamentals. I usually trade off, technical analysis. And yeah, guys, that's where my standpoint of view is. So, all right, guys, but so what we're looking at right here, is just the three sectors of the market, SPX, the QQQ, the NASDAQ, and the Dow Jones Industrial Average. And then, we got VIX on the right hand, bottom corner and stuff like that, which is the market volatility index. But I'm going to show you guys what I see in the market and, what potential, moves that, probably going to see and stuff like that. But I mean, I'm a technical analysis trader, from my standpoint of view, guys. I'm gonna give you just like the gist of everything I see and stuff like that, and what I see like in what potential directions that like we may be moving into. If you guys know anything about patterns, you can pretty much clearly see that there's a double bottom pattern on SPY or the SPX index 500. So we are looking at the SPX right here, but SPY is the same thing. But you can see a double bottom, guys. And for those of you who don't know what a double bottom is, double bottom is where a stock first travels down, in a downtrend, going downward, and then makes a bottom, and then probably consolidates right there, or if not, it'll go back up, make a lower high, and then it'll go back down a little bit, then make like a little lower higher. Then make another low high, as the same high as the last previous highs, which can be known as resistance. And then afterwards this will make the double bottom. What makes a double bottom is that it'll make a second bottom, similarly, and like relatively close, or probably like if not close, then probably exact or maybe close around the previous bottom that it made. So a double bottom is one bottom, and then a stock goes up, and then back down and makes a second bottom that's like relatively close, or if not close, then like in similar price level as the first bottom. That's what makes a double bottom, guys. And after the double bottom, almost always, or pretty much always, the stock will go back up. Well, that's just what a double bottom pattern is. But yeah, guys, but we're looking at SPY here, SPX, and we can see a double bottom pattern. And I literally called this out, in my I literally called this out in my trade in the Discord, guys. Out in the Discord, guys, and I give out free winning plays and all that stuff. And by the way, guys, I run and operate like a Discord on my own, and I give out, some free winning stock plays and, positions to take every day, swings from day trades, from swings to long-term leap options. And I call out, day trades every single day. And, I have like an 80 to 90% win rate. I just did a recap of all my plays. I took 38 trades, only 8 of them, you had to cut for a short loss. But, overall I have an 80% win rate. And that's fairly good. And I call out, day trades every single day. Giving out free winning plays, guys. If you want to join, guys, the link is in my bio, or maybe the link is in the description. But yeah, guys, so what you can really see here on SPY, which is SPY stock, SPX, same thing. You can see a double bottom. So guys, be prepared that so the market is going to pull back, like a fair amount more. In terms of SPY, SPY is at 440 right now, basically. I really think we're going to pull back down, all the way to 435. If not, I do have a feeling that, we're still going to go lower. We're probably going to see 430s again. I'm not too bearish on SPY, but, I am bearish. we did make, lows of, um, the last 2 weeks or 3 weeks. We did make the lowest lows on the SPX of 4,222 on SPX, so, on SPY, I think it was like 420 or maybe 422. I'm not quite sure. But, usually with like a double bottom, we will fall somewhere, within, the last support, like where we fell last time. Or if not, maybe like a little bit higher or something. But yeah, guys, I do expect to fall more. I do expect to fall below 437. And then if you fall below 435, then, we're probably going to land somewhere at another support level. Could be like 430, that big psychological level and stuff like that. And I mean, I'll show you guys my support levels and resistance levels on SPY and stuff like that in a short moment here. But yeah, guys, we're seeing a double batter. Yeah, guys, we're seeing a double bottom pattern on SPY stock, guys, on the whole market basically. And, so a double bottom pattern, always ends up, in the end, going back up in an uptrend. But I mean, yeah, guys, we can test down, and we can find out, support levels and stuff like that, to where we'll fall at, looking at the open on this green candle right here. The open is, 43.56 on SPY, which is 435. So, that 435 level is kind of a psychological level. So with 430, so, I do expect to fall back down to 435. If not, we may go a little bit lower and stuff. But yeah, guys, we see a double bottom pattern here on SPY, and you can see, like a double top pattern here on SPY and stuff like that. But but that's just like a mini pattern. It's not like we're gonna end up going, keep going lower. But you never know. We're only gonna end up keep going lower if if there's worse news. More COVID, more strains of COVID. If that rumor about the war in Russia, like in the U.S., just keeps sparking up and everyone keeps talking about it, and then we might see lower lows. If that's the case with all the news coming out. But yeah, anyways, guys, I usually just trade off technical analysis. I'm not too much of a fundamentals trader, but I do keep up with the news and stuff like that. So yeah, guys, we're seeing a double bottom pattern here on SPY. I'll show you guys, show you guys my support levels I have on SPY and stuff like that. And I definitely think it's going to help. You can take this as a recommendation, but in no way that I'm a financial advisor. So I am not condoning to take my advice. But this is just what I see, guys, and this is just what I've always and this is just what I've always worked for me. All right, guys. As you can tell, we're seeing a double bottom pattern on SPY, and my key support levels are for SPY, and the first one's 437. I actually expect probably like a possible super mini tiny bounce on 437. Maybe like we get like $1 or $2 bounce up on the same day. And then once we surpass 437, like and hold the candlesticks below 437, we could reach 435. And I really do think that there's potential to go lower on that. But yeah, we could reach 435 and then that big psychological level 430. I really don't think that we'll reach all the way back down to 420 as we hit 2 weeks ago. But if we hit 430, I think that's when I'm going to start being bullish on my position. I'm going to open up new positions, calls on SPYs, maybe debit spread on SPYs, probably like QQQ calls. I'm just going to open up new positions. I'm going to start taking long calls, because that's when my big support level, my biggest support level is probably 430. If we go under 435, I will start building a position from there, and then 430, I'll just start putting in more money in contracts and everything else. I'll start building up my position like 70% of the way. But yeah, guys, so right now, in the after hours, or even before the market opens, later on Monday, or later today, because you'll be watching this today. But we're at 441.5, in the after hours of pre-market, and if SPY is below 440, if we hold below 440 on Monday or this whole week, I really do think that we will see lower lows. Potentially probably 437 to 435 and then 430. Those are my key levels, guys. And just like I said, under 435, I'm going to start being bullish. We'll start putting a position on calls and stuff like that. But yeah, guys, those are some levels, as you can see on my screen. But yeah, I really think that we have to hold below 440. If we don't hold below 440, then, probably going to consolidate sideways. Or if not, we're going to get a big bounce up and then come back down. Because, the double bottom's not finished, guys. This pattern's not finished. It's definitely not finished. And, patterns always, most likely finish themselves at a certain time, if not within like a given time frame, but, but it'll finish itself sometime, So yeah, guys, if we I think if we open below 440 on Monday, on February 14th, then, I definitely, am bearish that, we will see, 437 and possibly 436 and 435. But just to make sure, we're going to wait till SPY closes below 439, or if it opens below 439 on Monday, I'm just probably going to enter into day trade puts, possibly some credit spreads on a call, and then I'll play to that downside of 437. I'll trim some calls, and I'll call out some trades in my Discord like I always do. But yeah, guys, I literally called this out on my Discord a couple days ago. I mean, as we can see right here, look, says I said SPY's big double bottom pattern, and the double top may be forming if we see a red day soon. And I said that on February 9th, so that was on Wednesday or Tuesday or something like that. But yeah, guys, this is what I see on SPY, guys. I see a double bottom pattern, Yeah, guys, but I just see a double bottom pattern here on SPY, guys, and I definitely expect to go a lot lower on SPY. So yeah, guys, don't always have a hedge in your positions. Don't be don't have your money fully like in one position, as if you're bullish or bearish. It's okay to do that, but at least have a hedge, which is the safe side. So a hedge, if you guys don't know what hedge means, HEDGE, hedging. Hedging in the stock market is having the opposite of your position as a safety net. So like, so if your position is down, your other position has your hedge, will possibly and most likely be up in profits. So that way you're not fully down on one position. So when you're hedged, you're actually at a safe level, a safe balance between your hedge. So like if one position is down, the other position will be up. A hedge, for example, so if you have SPY calls, so if you want to hedge that, if you enter into SPY calls, if you want to hedge your SPY calls, you would get, SPY puts, or you would get QQQ puts, or you would get VIX calls, which is VIX. The VIX is the volatility indicator index in the market, so I was actually in some VIX calls earlier this week, and, I profited a lot off VIX. VIX, if you buy a call on VIX, you're basically, betting that VIX will go up, and VIX only goes up, when the market is, has like a lot of volatility, and especially when it's going down. SPY's going down, and VIX is going to go up. SPY's going up, VIX is going to go down. SPY was going down the whole entire time. I was making some day trades, swing trades on VIX the past few days, because the market dropped so much, guys. The market dropped about $20 in the past 3 days, which is nuts. If you swung some puts, you would have made over 1,000% gains, no doubt about it. On VIX, I made quite a bit amount of money. I'll post the screenshots on the computer screen right now for the video for you guys to see. And, I called these out in my trade floor on the Discord too. I called out these VIX plays, these VIX calls that expired. Expires in March 15th, and yeah, they profited a lot. They profited, 20 to 40%, around $70 per contract, depending on how many contracts you bought. But yeah, guys, I called some plays out last week. I call plays out every day if you want to join. Link in the description. But yeah, guys, that's SPY for you. And if you look at the QQQ, which is the NASDAQ, you can see, you can basically see. you can basically see, kind of the same pattern as, SPY on the NASDAQ too. And not even just the NASDAQ and all that stuff, but guys, look at this. I mean, you can literally see a double bottom forming on the NASDAQ, and probably look at the Dow Jones Industrial. You can probably see another double bottom. But yeah, guys, look at the NASDAQ, guys. We downtrended. We made a lower high. We came down a little bit for a support bounce, and then we made a second high. Now we're on to our double bottom, which makes our double bottom full and completes the pattern, but not yet completes the pattern. We still have to uptrade after we fall again to our support level, and that big support level on the NASDAQ is exactly 14,000, which is pretty ridiculous, which is a big psychological number. I definitely think we'll bounce there. The NASDAQ right now is at 14,253, so we're 253 points away, but, doesn't mean that we won't fall that much. We could fall that much or more or less. But yeah, guys, on the NASDAQ, we're forming a double bottom pattern too, just like you saw in SPY. And guys, and something to keep in mind here, look, if you look at SPY, so guys, if you see a purple line on my screen, that's a simple moving average line indicator. That is a simple moving average indicator, and this is the 200-day SMA. Okay, the 200-day SMA on the daily chart interval is a very good indicator for me. For a stock to close, okay. If a stock was holding above the 200-day SMA, which if we zoom out on SPY, you can see that SPY's been holding, way above 200-day SMA, and if a stock, usually closes, below or above the 200-day SMA, that's usually like an indication that it's going to keep going in that direction. Guys, I'm going to draw a circle here. Okay, you can see on this circle that SPY stock, approach the 200-day SMA right here in this orange circle and actually close below the purple line, which is the 200-day SMA. And after it closed, that was an indication that, okay, well, SPY could not hold a 200-day SMA, moving average. And that, during this time, I actually knew from that indication and confirmation that we were going to see lower lows. And look at that, and, we did see lower lows, after that close in the candlestick around 438. We saw lows all the way down to 420, which is an $18 move down, which is a lot, guys. But yeah, the 200-day SMA, it closed below that, 2 weeks ago, and that was a big indication that, we were going to make lower lows. I already knew that, I called that out in my Discord and stuff, and you can even see right here, it approached the 200-day SMA, it actually failed to close below it. It actually failed to close above the 200-day SMA on this orange circle right here. If you look at this orange circle right here, you can see that this green candle approached the 200-day SMA, but it still failed to close below it, this green candle closed at almost 442, 441.95, and the SMA at this time was 442.5, 442.5, and it did not close above the SMA. So that was an indication of a small rejection right there. But you can see that the next day, this big green candlestick right here, definitely opened. It opened, below the 200-day SMA, but it still closed way above it. It closed like $8 above it on SPY, which is a lot of points, But yeah, guys, and as you can see here, this is why I brought it up, guys. You can see as this red candlestick, closed below the 200-day SMA, just like it did previously in the last 2 weeks, over here. And, when it closed below the 200-day SMA, we saw more downside, So, and guys, you always got to remember this, that, the market has a history. Okay, the market has a history. It's going to remember what it did in the past. The market solely moves off technical analysis too, not just news, but guys, I can't, stress about, how much technical analysis does work a lot. And guys, and this is another reason why, technical analysis works. It's because the market has a memory, for example, we fell at this level, around 432 on SPY, after this close on the green candlestick, and the other close in the opens on the red and the green candlesticks, like we close around 432, because the market knows that 430 is it's a big psychological support level for SPY. Sometimes we might not hit it accurately like or on point, but we bounced a little bit, like we close around 432. So the market has a memory, guys, and this is why technical analysis works. Okay, so for example, look, we just closed below the 200-day SMA moving average on the daily chart here, the daily time frame chart, and we did see lower lows last time we closed below. So I really don't doubt it, and I'm pretty certain that we're definitely going to see more lower lows on SPY, probably falling down to at least 435 and below. But yeah, guys, we closed below the 200-day moving average on Friday, and I'm not surprised. I'm very bearish on SPY in the whole market. So I really have no doubt that we will see lower lows. Not lower lows, but we will see lows again. And yeah, guys, we just closed below the 200-day moving average, and we will see lows. So I'm not in any bearish. I'm not in any bearish or bullish positions right now. Just besides my long-term shares on stocks, but like when we do see back down to 430, I will start loading up on calls for long-term on SPY and QQQ in the whole market. But that's just my opinion, So, but yeah, guys, we just closed below the 200-day moving average. This is I know this is not really technical analysis because this is an indicator, but it's still technical analysis. And that's why technical analysis does work too. Because we just closed below the 200-day moving average, and even without the 200-day moving average, if we pull up our double bottom pattern chart, here that we see on SPY, we hit lows of pretty low, and technical analysis, well, this is a pattern. We made a full pattern here. You can see the first top, the second top, and then we're definitely going to make a second bottom here on the first bottom of the double bottom, and it's just a pattern, guys. And this is why technical analysis always works, and it works a lot in the stock market, and that's just what I trade off, guys. And yeah, I've just had the most luck and results and gains from that, and knowledge and experience from that. So that always works for me. I know a lot of people trade off technical analysis too. And yeah, guys. Yeah, but this is why technical analysis works and stuff. But yeah, so overall, guys, I'm bearish on the market for SPX. I expect us to come down to 430 or 4,300 on SPX. We're looking at SPX on SPY. Looking at 430. So we may drop, to the mid-range around, 435, 4,500 on SPX and stuff like that. The QQQs, QQQ and NASDAQ, they're already approaching, like a bottom here support, which could be the closing this red candlestick. The closing this red candlestick 341.10. I definitely expect us, probably to bounce at 340 on QQQ or on the NASDAQ. Looking at the NASDAQ, that's 14,000 on the NASDAQ you're looking at to bounce. But yeah, if you guys know, QQQ is basically, the tech sector index fund ETF of the NASDAQ. If you look at the Dow Jones Industrial, look, this is why technical analysis works. Look, you guys, we're making a double bottom pattern here on the Dow Jones Industrial. Look, we just made a double top right here, mini double top, and we're obviously going to hit back lower at some lows. We did fall to 34,000 on the Dow Jones Industrial. We're almost at 35 right now. We're at 37.7, or 34.7 on the on the Dow Jones Industrial. But yeah, guys, overall I'm bearish on the market until we hit, until we drop, probably like another percent or so, or maybe a little bit more. But yeah, guys, if you zoom out on SPY, you know, other, you can see that, we did just have a correction. I mean, this was the previous biggest correction that we had, that was last year, after Corona hit, I mean, we fell a lot, guys, we fell, I think like 50%, maybe 40%, I'm not sure, but maybe a lot more than that. But yeah, guys, we just had a correction in the stock market. I mean, look, you can see this constant uptrend on SPY right here, and then we broke this uptrend, we could call this a rising wedge. Rising wedges will always break down, and then, they will break out, and then we'll keep going down, because they broke down in the falling, yeah. So rising wedges, guys, we can call this a rising wedge on SPY, the long-term uptrend and stuff, but for a rising wedge, us rising wedges always break out and down. So, as you can see here on this orange circle, we broke out, and, we continue, downtrending after that breakout right there. And that's what makes this rising wedge a rising wedge, and it's not that just like, we broke down and continued to downtrend, but, we had a correction. I mean, look, we hit highs of basically 480 on SPY. We fell all the way to, our lowest lows, which is 2 weeks ago at 420.76. If you do the math, guys, 480 minus 420.76, well, that's $60 basically. And, a correction is considered, 10% of a market drop in the last, we just had more than 10% in the market drop in the last 2 weeks. We had actually 15% drop in the market. 15% drop in the market. That's ridiculous. That's insane. But yeah, guys, so we just had a correction. And now we're forming a double bottom pattern on the market here, which, we will see another bottom. And I definitely expect us, after we see the double bottom, it's either that, we will consolidate, sideways, maybe for a week or two, or, after a couple of days, we see the second bottom. I have no doubt in my mind that, the market's going to start, soaring back up within 2 weeks. Honestly, probably like within like 2 or 3 weeks, like we're probably going to be back at 480 or probably 2 weeks or less. But yeah, guys, the market will make another bottom soon here. And, after that second bottom, I'm very bullish, very, very bullish. And yeah, yeah, I don't doubt that, we'll be back up soon at our highs that we were, previously, but, not just off, not just off technical analysis, but, also has to do, also has to do with, the Federal Reserve, interest rates and, all this, news about, Corona and the wars in Russia and stuff like that, the sparked up rumors that's probably going to happen or not. But yeah, guys, the market, really moves off technical analysis, more than anything. And this is why technical analysis works. And yeah, guys, so yeah, guys, that's really all I have here for you today, so yeah, guys, that's really all I have here for you. So, but yeah, guys, that's all I have for you today, guys. Just giving you my input and advice, or my thoughts and analysis, technical analysis on what I see in the market. What I expect, for us to go in a direction of movement in the market. So I mean, yeah, guys, overall I'm bearish, till we fall down another % or two, and then after that, I'm pretty bullish, because yeah, we just hit a double bottom pattern on SPY in the whole market here too, but. Yeah, I mean, yeah. I also do have a watch list for possibly, next week. It's a small watch list, I mean, so the watch list, guys, for next week. It's just 5 stocks. I mean, it's just really, one more stock and, no, I mean 3 more stocks actually. Okay, so yeah, guys, I'm watching SPY, the QQQs, which is the NASDAQ, watching Microsoft stock, watching Apple stock, and Nvidia stock. So yeah, and if you want to really know, my opinion on those stocks, well, I mean, I'm all bearish on them. if I'm bearish on SPY and QQQ in the whole market, then I'm going to be all bearish on all these stocks. You know, these are tech stocks, and tech stocks definitely follow the market all the time. Yeah, guys. So I'm very bearish on all these stocks, guys, and yeah. But yeah, guys, that's all I have for today, guys. You know, always be safe in the market, guys. You know, if you're in a position, you know, don't be so opinionated about, what direction, you want it to go in, because, I mean, like, it might not always go, like, in the direction that you favor. You know, that's why you got to stay hedged. You know, if you're in a call, buy a put for protection as a hedge. Vice versa. If you're in a put, buy a call. But if you're in a call or a put, you can buy a call on VIX, or you can buy a put on VIX, which is the VIX, the volatility indicator, the index fund of the market. But yeah, guys, always stay hedged, guys. If you want to win in trades, you have to think like a professional trader, so you don't take risks if you don't know, what's going to happen. You have to have a solid plan before you trade. You got to plan out your entry, you got to plan out your exit, and you got to plan out, where to cut, and you got to plan out, what level to take profits at, and, you got to mark out, price levels too, to where to sell, at, and, where to trim profits too. And, always make a plan. Never take a trade without making a plan, and never take a trade without being too certain, without being confident on your position to play, and never take a play without, confirmation, guys. Confirmation is really key. So, yeah. All right, guys. Well, I'll catch you later in the next video, guys. Stay safe in the market and keep a hedge if you're in a position. If you guys want to join my Discord group, guys, and the link's in the description. I give out, daily day trades, swing trades, market trades, option trades, shares, call out. I give out option trades a lot. So, yeah, guys, if you guys want to join, links in the description, guys. All right, guys. I'll catch you later.